Millions of Facebook users are about to get their chance to buy a slice of the company, which is launching on the US stock market later today.
The company's initial public offering will give Facebook a big cash injection to fund future growth opportunities. We're joined now in our Sydney studios by Mark Pesce, a futurist and an honorary associate in digital cultures at Sydney University. Mark Pesce, good morning to you. Not surprisingly, this float has proved very, very popular indeed.
It has. I mean, Facebook has actually increased the number of shares by 25% because they were oversubscribed.
And it's not all good news for investors because all those shares have been put onto the market, but people like Mark Zuckerberg and his colleagues will still maintain a very firm, controlling grip on this company.
Absolutely. I think Zuckerberg is going to end up controlling about 25% of the shares, which basically gives him effective control of Facebook into the future, which is definitely what he wanted because he has a vision for Facebook as the sharing engine for the 21st century, and he sees maintaining control as a way of being able to promulgate that.
We're just getting news, Mark, that the official valuation has now come in at 105 billion Australian dollars. Now, what would Mark Zuckerberg be hoping to use this money on, looking at future opportunities?
Well, people are constantly thinking, is Facebook going to be top of the stack? Look at MySpace, which was here and then gone. And what Facebook can do is they can use this $16 or $20 billion they'll earn to buy any competitors that look like threats. They bought Instagram last month for $1 billion. People questioned the worth of that, but they were getting 30 million people who are using Instagram all the time. So really what Facebook is going to be doing is using that fund to help defend themselves and defend their market position.
But still, there are a lot of analysts raising concerns about perhaps this float being overvalued or the company being overvalued because, as we've been reporting, Facebook is very popular. It has 900 million users, but generates revenue of a relatively paltry, given the size of the company, $1 billion.
Yeah, there's obviously a bit of a mismatch right now, but I think Facebook is also finding its way into all the different ways that it can exploit the 500 million users who use it every single day and generate revenue from them. I think advertising is only one model. We have to remember that Google, which is very profitable now, took a number of years before it actually stumbled into its advertising model as a way of generating revenue. So I would expect that Facebook, with its fingers in 500 million pies, is going to be able to find plenty of ways to make money from its users.
The challenge, of course, for the company's founders, if they want to go down the advertising route, is that they potentially could annoy users by having too many ads on the site.
Yeah, there's always going to be a very thin line, I think, between providing information that's useful and providing advertising that's annoying. The nice thing about social advertising is that because it's coming through your connections, it's generally more relevant than something that would just be popping up on a web page.
Mark Pesce, thank you very much for your analysis this morning.
Thank you.